in the red shirts are all part of our team, and they're awesome. And we appreciate you guys coming out on a little bit of a gloomy day to just talk about what it takes to buy a house. We're actually pretty good at that. I'm allowed to just tell you how great they are. So we helped over 60 home buyers last year get into homes successfully in a very competitive market. So there's some tricks to doing it. But really what we want is to have you guys know how to be ready to buy a house. Excuse me, as my mask drifts down. So this, by the way, is a very casual environment, very interactive. Interrupt us, ask questions. We really want to help you out. We had our wonderful lender, Joey Whalen, is here. She's the one with House America. She is a wealth of information. She can just answer pretty much any financial question you have about buying a house. She's going to talk a little bit. And so thank you. And then we're going to have a raffle, I believe.
I'll do it at the end.
You're taking care of that.
Don't leave.
I think we have some AirPods.
Yeah.
Not that anybody would want those. I'm happy to take them if nobody needs them. So let's get started. I don't know who's up first. I know different people are talking.
Joby.
Yeah. Joby, there you go.
Okay, great.
It's all you. I didn't know that the order of service is there.
Okay. Wow, that's awesome. Okay, that's an older picture. A calmer girl. Okay, so my name's Joby Whalen, up there with House America Financial, and I want to thank the Miranda team so much for inviting me to come out here and talk to you guys about the lending piece of the home buying process, which is obviously a huge piece of the process. And I was thinking about it. Well, I want to introduce Natalie too, Natalie Worsham's in the back. She's a co-worker with me over at House America, and I'm glad that she's here with us today too. I was thinking about it today and thought, my pet peeve is to show up to anything and leave and think, I didn't learn anything. Like, I want you to be able to walk out the door and leave with some information regarding the lending piece, which is my specialty, that maybe you didn't know before, or something that will help inform you as you start to go look at properties and look at the Miranda team. So a little bit of background on myself, just quickly, is I have been in the business for about a little over 16 years. I've been with the same group for my entire career. We are what's called a direct lender. So we do everything in-house. We do underwriting, processing, we draw the loan documents, we fund the loans, everything is done under one roof, which is, the appeal to that for you, the consumer, and then of course for realtors, is that we're much more nimble than like a larger institution like a big bank or something. We're not a retail bank like Chase and Citi. We're not a credit union. We're not a mortgage broker. We are in our own little category called a correspondent lender, and it's a direct lender. So it's just so that you've heard the term and kind of understand it a little bit. And before I did this, and I'm old, so 16 years would not be much of my adult career. So prior to that, I was a partner in an appraisal firm, and prior to that, I worked for a shopping mall developer. So somehow I've been in real estate most of my adult career with an English degree. So I don't know, no figure. So I was thinking about what are the most important things that I would want you to walk out of here knowing that you didn't know maybe coming in, or put some sort of puncture some myths that maybe are out there. And I think one is that I still think a lot of people think you need 20% down or more to get into buying a house. And if you're someone who thinks that, I just want to let you know that there are programs, all kinds of options that are as little as 3% down, 3.5% down, 5% down. I've even got a loan option that is 1% down. And I don't want you to think that, you can walk out of here and go buy $1 million house for 1% down. That's not how it works. So there's income criteria associated with like the 1% down, for instance, or the 3.5% down. There's that's a different kind of a loan product. So, but the important takeaway is that you don't need 20% down. I was just talking to someone today, And she said that her fiance was looking, they were looking. And she said, yeah, he said we need $150,000 or we can't even start looking. I'm like, what is he saying? Don't listen to him, he's a firefighter. He doesn't know. So just the important thing to know is that you don't need to have necessarily a huge down payment to get into something here. And so that's probably one of the key takeaways. The other thing is the pre-approval process. And you'll be working with the Miranda team, assuming, and so they're going to tell you all about the importance of the pre-approval process, but I just want you to have heard it here, that the pre-approval process is pretty much now, it's non-negotiable. I mean, I don't think, most realtors will not even start looking with you unless you've been pre-approved by a lender. And more importantly than that to me is that it's so important for you to go through the pre-approval process because it tells you so many things. I'm the queen of Google. I Google absolutely everything. Sorry, Apple, but I Google everything. And but I don't Google and go online and try to figure out what you're qualified for or what a payment looks like. The information is just too, it's too not specific. It's very general. And so a lot of times the payments are off because the property taxes are not being calculated correctly, or they haven't factored in certain things. And certainly the internet doesn't know what you do for a living, what the nature of your pay is. And so, it's, with the pre-approval process, you learn so much about most importantly, what does that payment look like for the house range that you're going to be looking at? Really, what does it look like? How much do you really need for that down payment? And what about the closing costs? There are additional costs associated with buying a home that are over and above the down payment on the loan, and you need to have factored those in. So how much do you really need to get out the door when you go buy a property? And how much can you afford? What are you qualified for? But also, I think most people today that I speak to, they're very, they're making very well-informed decisions. I don't really talk to a lot of people that are just bulldozing their way into these things. And so they have thought about, I paid this in rent, and this is what I'm comfortable with a mortgage payment. This is what fits into my budget. So I can tell you in that process, okay, if $2,700 a month is where you are most comfortable, then you need to be looking here for a property. And then we also need to determine, are you qualified for that? And it's not just a matter of what do you make and what are your debts, and you're qualified, or what's your credit score. It's so much more complex than that, and I don't want to get kind of in the weeds on that, on lending. Like really quickly we can just be like woohoo, and people's eyes just gloss over when it comes to the lending piece. But it's, I've talked to several of you here already, and it's like we've got a variety of different wage earners and different types of income. We've got entertainment and new and relocated, and all of those things factor in, where if you go online and try to get a pre-approval by just inputting the information, your name, your address, your social, and your income. I mean, I do it for a credit card, right? What's your median income? Just throw out a number. I kind of know what my income is. I throw it in, but no one's analyzing the nature of that income. Is it commission income? Is it new income? Did you just get that job? Is it a new career? Is there bonus income that you're putting in there that you've only had for 6 months that we can't use? Did you sign a signing bonus to get your job, and you're including that? Like all these things fit into the guidelines of how we pre-approve you. And it's such a huge piece of the process is the income and how we analyze the data. So the pre-approval process, and typically, first of all, it's free to you. It would take an hour. I mean, if you're just a typical W-2 wage earner, a pre-approval could be an hour. Certainly you'd have it done in a day. And if you're complicated and you've got multiple tax returns and you're self-employed because you've got multiple businesses, that might take a couple of days. But it's something that's done really quickly, and it's extremely informative. I just did one pre-approval last week, and the guy, we do a pretty deep dive, and I'll tell you what documents we're looking at, but we look at tax returns as one of them, and he's self-employed. And I looked at it, I said, I need you've got a C Corp. And he said, no, I've got an S Corp. I said, no, you have a C Corp for sure. He said, no, I'm an S Corp. I said, no, absolutely 100% you're a C Corp. He's like, I gotta talk to my accountant and figure this out. Like, these things kind of come out that you weren't really expecting. So the process is invaluable, in my opinion. And I think I always tell, even if you think you want to buy next year, and you're really just kind of planting the seeds and trying to gather your information, I think the pre-approval process is so illuminating for you and gives you so much practical information that I would encourage you to just go through it, even if you're going to wait. I love to do pre-approvals. I love to work with just trying to help in any way I can. And so I have plenty of people that come to me that aren't going to buy for a year or two. But at least we can look at it and just stop getting all that stuff that you see online or that's going around in your head and I wonder if, what if, I think I like this, I'm not sure if I can afford this, I might have to pay this debt down. All of that can get answered in that process. So kind of moving, part of the pre-approval process is credit, looking at credit. And the one thing I really wanted to mention also that I want you to walk away hearing is that oftentimes people say, I need to get my score up before I get pre-approved, or I want to pay down debt, or I need to pay down debt, or I need to pay off my car before I get pre-approved. And that might be true, and it might be something that's a goal that you've set for yourselves, where it's like, okay, I want to get my debt load down before I buy. Completely understand. But I would encourage getting the pre-approval before you make those determinations, because a lot of times there's debt you think you need to pay off to qualify that you don't. Or, like an example is an installment loan. So, the most common is a car payment. Not a lease, but an actual car payment. Let's say you have 9 months left on your car payment and it's $350 a month. We don't have to hit you, include that payment in your debt load if there's less than 10 months remaining on that debt. So you might have taken $3,000 and paid off that car loan that would have gone toward closing costs or gone toward more moving costs, gone toward your down payment, but you wouldn't know that. So it's a conversation I think it's super important to have before you start making any decisions on what to do with debts and credit and all of that stuff. The other thing about having a credit pull and going through the process is, and this happens, I swear, in 1 in 20 people, literally. I'll pull the credit, you'll tell me your credit's 780, 800, it's super high, I'll pull it and it's 670 because there's some $10 medical collection that you would never know about that's on your credit that we can deal with now and try to, I can try to help you. I'm not a credit repair person, but I know enough to be able to kind of guide you and help you try to get that fixed. And we could start looking at that so that you didn't go in all of a sudden and be like, oh, I've got 800 credit, I'm going to just kill it, and you got that, and we need to deal with that because that changes what your options are in terms of loan types. So pre-approval and down payment, these are the critical takeaways, really. Credit, really important to speak to someone. Lenders pull what's called a tri-merged credit report. So we pull all 3 bureaus, Equifax, Experian, and TransUnion. And we look at all of that credit. So where you're looking online, if you look at your consumer credit that you just have signed up for or something, it's not nearly as involved. It's not nearly as in-depth. This credit pull is so invaluable. I mean, even if you just do a credit pull, I can just do a credit pull for you and just let you see what you're dealing with. It's really, really helpful. Yeah.
And that's some of the resistance that people are worried, the people pulling my credit, it's going to bring my credit score down.
It is, and that's always, so my thing on that is it brings it down a little bit, and if you've got great credit, there's nothing to worry about. If you feel like, okay, my scores that I've been seeing through, the credit card reporting is 640 or 620 or 580 or 660. Yes, it's going to bring it down, but there's no way around it if you're going to get pre-approved. And if you're just thinking you want to set this up from a year from now, then this credit pull it does not mean anything. I mean, it's going to regenerate pretty quickly, and what you will get from the credit pull in terms of information and a game plan for the future, if you do have tricky credit, is invaluable. So I think sometimes in the pre-approval process, someone will come to me and say, look, my credit's great, I've got no debt. I don't want you to pull my credit. And of course I'm respectful of that, and we can do some sort of, I can look at everything else and just not do that piece, but it is a big piece that's missing. And it's, Natalie just had a situation where, you would say, okay, great credit, and I don't have any debt, and that's great, but this is somebody that was getting a larger loan. jumbo loans, so a loan that's, let's say they were getting $1 million loan. Jumbo loans look at credit completely differently. So this person only had one trade line, one credit line. They don't carry a lot of debt. They don't have a car payment, they didn't have student loans, they don't have a debt, they didn't have a lot of open credit. And that's, with jumbo, they want a lot of jumbo loans want more credit history. They want more trade lines. So we had to work with that. So there's all kinds of things that can come up during the process. And again, the pre-approval process is it's super important. So that when you go out, it's almost like, if you're pre-approved properly, then you should be able, once the pre-approval is over, you know what you qualify for. If you're pre-approved by a competent, good lender, you know what you're qualified to get, and you know that you're going to be able to get that loan, unless you lose your job or something. So it's almost like going out with a blank check. You know that you can go buy a $550,000 house or condo. You know that you're qualified for that, and you know what that's going to take out of pocket to do that. So it's super important. The other thing on that was, oh my gosh, I want to talk about loan types, and this is where we can kind of get in the weeds, so I'm going to do it very generally. But there are conventional loans, and there are government loans, and there are what's called non-QM loans. So I just want you to know, conventional loans would be, and I'm sure most of you have at least heard the terms Fannie Mae and Freddie Mac. So Fannie Mae and Freddie Mac, they do conforming loans up to a certain loan amount. In Los Angeles County, that loan amount is $970,000. It's gone up again this year for 2022. It's very high because we're a high-cost county. And that's a conforming loan. That has one set of guidelines. And then there are non-conforming loans, which are loan amounts above that. So if you're looking at $1.5 million, a $1.5 million house, or $1 million, 1.2, you might be looking at a jumbo loan, a non-conforming loan. So those are conventional loans. Then there are government loans. That's FHA loans, which are great. They are a great loan option. You'll hear them advertised as first-time home buyer loan, but it's not. Anyone can get an FHA loan, whether you've owned houses in the past or not. And you can put 3.5% down. It's a little bit more forgiving on credit score. And the debt load is it allows you to go a little bit higher with your debt load, so it can be it can work out to be a really great option often, whether you've owned a property or not in the past. So FHA loans are backed by the government. They're a great loan option. I love them. They're a great loan. Then there's VA. So if you're a veteran, the veteran can get it and can get it in as little as $0 down. So the VA loans are great, but you have to be the veteran on the loan, veteran and spouse. That's the only option. And then besides that, there's what's called non-QM, which I don't want to get into much, but these are loans that are a little bit more exotic. They allow you to get in using just bank statements if you're self-employed, or just a profit and loss statement. They have a little bit, they're just more out of the box. They're for someone who's more entrepreneurial, who's self-employed, who's looking to buy some investment properties and can't show full documentation in the tax returns. So those are the three main kinds: conventional, government, and then these non-QM loans. And within that are all kinds of different loan options and products available to you. So just wanted to touch on those. And then the other thing is the documentation that you need, and it's all in here, so don't worry about it, but that you need for a pre-approval is typically, and again, it's in here, it's 2 years of tax returns, 2 years of W-2s, the most recent 30 days of pay stubs, a bank statement, and a credit pull. That's really what lenders are looking at. And then ideally, that's what we have for the pre-approval. And then we need some information. How long have you been at your job? Are you new at the job? How long have you been in that line of work? Does your income, what is the nature of those pay stubs in your pay? Are you hourly and it varies and you get paid overtime? You don't, you work 20 hours one week and 40 hours another week. All of those things are looked at in that documentation. That's what we need, that's all we need. Most of it's online, it's so easy, and then that's, unless you're self-employed, and then we get into a little bit more information on those tax returns and stuff. So that's that's the pre-approval process, the documentation, the importance of credit and not assessing your own debt and trying to figure out what to do. And then, excuse me, down payments. And then the last thing really is just, and there's a whole thing in this booklet about what not to do. If you're in here, I'm assuming you're entertaining the idea of purchasing at some point. So what you want to avoid right now is, any large purchases. If you were planning on getting a new car and you want to buy soon, and you're thinking you're going to go through that process this year, I would not buy the car till you speak to a lender and you've worked out your numbers. Just hold off on that. Leases, buys, anything like that. Don't go get a bunch of new credit. If you're going to go out and shop and at the department store or wherever they say, you save 50% and sign up for a new credit card, I would not do that right now. Just don't do that kind of stuff. If you've got a lot of money movement, a lot of money coming in, a lot of people still put cash aside. They keep it at home, they keep it in the coffee jar, they keep it under the mattress, they keep it in a safe. Don't take the money and start putting it in the bank. Like, you need to wait on that. If you're going to be getting gift funds from family, you don't have to get that right now. So, don't go get a lot of new credit. Don't go buy any large purchases. Don't be doing a lot of money movement. Don't be closing credit cards or opening credit cards. None of that should you be doing right now. And those are kind of the main, that's what's contained in the book. That's really the main lending piece. There's a lot of loan options. There's a lot of down payment options. The pre-approval process is huge. Careful with your credit. And those are the documents are laid out in here, what you would need to gather for the pre-approval process. And then, of course, everyone's a little bit different, depending on what you do for a living, the documentation will change a little bit. But that's kind of it on the loan side.
What about debt consolidation? So you have a bunch of credit cards with high balances, and you want to kind of just consolidate that down. Obviously, you keep the credit cards open, and the consolidated loan pays them off. But how would that affect?
That's such a good question. And I would not do that until you speak to a lender, because some debt consolidation, if you go through it. Now, if you're just trying to put it on the one card, I don't think it's an issue. It shouldn't be an issue, but you might also. A lot of the credit score is based on balance to limit. So if you move it to a card where you've got a $10,000 limit, right? And now you're going to move everything over there. So now you've got $9,000 on your $10,000 limit. It could impact your score. Now, you freed up some debt over here, but maybe you didn't need to free it up. Maybe the balance to limits were low-ish, but you just wanted to spread it all out and move it all in one. That could be a problem and could impact your score. And what we can do, again, it's totally something that I would talk to a lender first before you do it, if you're thinking you're going to be buying sometime down the road in this year, really. Because a lender can do, what we can do is the system allows us to run what's called a what-if scenario, which is invaluable. So I could pull your credit, and I could look at all your stuff, and I could all of a sudden show 6 cards paid to 0 and 1 card with all the balances moved over, and it will tell me pretty much what that's going to do to your score. Is it going to take it from a 780 to an 815? Is it going to take it from a 780 to a 720? And we would be able to see that right away. It's not exact, but it's really good.
Cool.
Yeah.
Thank you.
A great question. Any other questions? Yeah.
So can you talk about, what about student loans?
Oh, my favorite subject, thank you. Oh, those student loans. Yeah. So, student loans, those are an interesting subject. So, if you have, again, another reason to absolutely go through the pre-approval process, and if a borrower does tell me they have student loans and they don't want me to pull the credit, I would really try to encourage them to let's pull the credit and look. But if you have student loans that are in forbearance or deferment, and so many are right now, it can be worse than if you were making a payment. So let's say you have $50,000 in student loans and you're not making any payments. We have to hit you, in terms of calculating the payment, we have to include a payment of some kind with those loans. So we're either going to calculate, the guideline is, there's 2 guidelines that we can choose from, but it depends on which loan type you're fitting into. One of them is we have to hit you with 1% of the outstanding balance for your payment, which can be quite high. Another option is 0.5%, but we don't know which one's going to fit for you until we see your whole profile. So sometimes what I'll do, I have one now actually that has a lot of student loans, and I hit them with the 0.5%. It works, but they actually had contacted the student loan provider and they are gonna be getting on the income-based plan. And so their payments are gonna be pretty low. So if we can get documentation from the student loan provider about, when they're gonna start making their payments, what the payment's gonna be, we can use that. So student loans are a really big piece of things right now. And it's a shame because there's a disconnect clearly between the government, and the student loan providers, many of which are federal, and some are private, but a lot of them are federal. And, they forgave it, but yet the guideline still says, oh yeah, if you show zero payment, but we still have to hit you with 1%, which is gonna blow you. Because a lot of people's student loans are in the hundreds of thousands. I mean, they are high. So, again, I think even if you think, I'm not gonna buy for a year or two, and I just am trying to gather some information on what this is all about, I would encourage you to get your credit pulled, go through the process, and just take a look, and know that in a year and a half, you're good to go. Like, you're new to the area, I know that from asking you, and you're in a field, I don't know how you're paid, but you're in a field that typically entertainment is variable pay. You go from job to job, and you get paid multiple W-2s. That income is very different, and you need a 2-year history of that income. So, there's all these nuances to all the different income types that we have to look at. But I would just go through the process anyway and just see what it looks like.
Okay.
Anybody else? Okay, so my number's on the back, and you can call me anytime for any question. If you're working with another lender and you're not understanding what they're telling you, I'm happy to answer questions. So much of how I try to approach my business is informed by my own experiences as a first-time buyer when I was in my late 20s, and it was awful. I could not tell you my realtor's name. I do not know that person's name. I've never spoken to them again. That is not this group. They're so fortunate. And the lender that I worked with, I didn't understand a word this person was saying to me, and they didn't seem interested in explaining it, and I was completely confused the whole time, and I was young, and I wasn't comfortable asking a ton of questions. I didn't know what to ask, and it was an awful experience for me. And it worked out, I got a house, but tried very hard not to approach it like that. So I really, please use me as a resource. Now you've got my number, you can call me anytime, and you can ask me anything you want to ask that maybe you didn't want to ask here, or as things come up down the road, I'm happy to answer questions for you anytime. Anything else? Okay, on to the next one. Thank you so much.
Hello. And part of my presentation, I'm Shannon Brandon. I'm the Miranda team. Been in real estate my whole adult life, in one fashion or another. Started in property management and then rolled over into residential sales, and absolutely love being on this team. So, Joby, I would like to ask your expert opinion about interest rates.
Oh my God, we didn't even touch on that. Good one, good plant. I don't want you guys have to turn around. Interest rates right now, that's a great question. I'd say the average interest rate right now is probably 3.75, which is still incredible. Just to put it into context, and there's a lot of people here that are, my generation, and we bought houses a while ago, and I bought my first house, the interest rate was 8.5%, and I got a second loan with it when I bought it to help with that down payment, and it was 11.5%, and that was just where the rates were. So just to keep it into context, 2.5 years ago, rates were in the 5s at the end of 2018. So this people who have only heard rates with a 2 in front of it are like, 3.75, are you crazy? That's insane. It is still historically low. The thought is that interest rates are going to continue to rise through 2022. There's a lot of, you'll see a lot of, if you follow any kind of finance or business stuff, you'll see, they're going to raise, Feds are going to raise rates in March, Feds are going to raise rates in March. But what happens often is that the Fed doesn't raise our rate as, when I quote your rate, the Fed hasn't dictated that rate. They have a kind of a baseline lending rate, and then banks build on that, right? Lenders build on that baseline rate to create our rates. So lenders across the board have all already started to raise their rates, right? From 2.75 2 months ago to 3.75 today. So what could happen in March when the Feds officially raise that sort of baseline Fed funding rate is rates won't do anything. they might not jump up that day, but eventually rates, are going to normalize and be something, when I started, first of all, rates never changed. It was like, woo, we had a rate change. It had been months, and we finally had a rate change. And they were in like the 5s and 6s. So these rates, it's gonna probably go up. So I think, again, when you get pre-approved, if you get pre-approved now, you kind of just take that into consideration and maybe look at, what if it went up a half a point, if I'm not gonna buy for 6 or 8 months, let's look at what those payments look like. But that's what's happening with rates right now.
Okay, thank you very much. At some point in my presentation, I get to that, so. But to start with, when do I hire an agent? And as, on the buyer side, you hire us to represent you. But truly, the payment comes from the proceeds of the seller. And so it's not typical at all that a buyer will ever pay the real estate agent a commission. So I think sometimes people are like, oh, I don't want to hire an agent to help me find a house. And truly, the cost is built into the seller's proceeds. You will not be paying anything additional. So just wanted to get that clear first. So my first thing is when I talk to a buyer, I'm like, let's make a list. Let's really try to figure out what it is that you're looking for. And so before you even decide who, you need to decide what. So make your list of the locations, and if you can't get in Burbank, how does it feel in Sun Valley, North Hollywood? How many bedrooms, how many bathrooms? Is a bath and a half okay? There's definitely a price difference with each thing. The square footage of the home and the lot size, what's important to you? And then I always ask everybody, what's your must-haves? What is, you have to have it no matter what. And make that list. The laundry inside, have to have the yard for the dog, must have the garage. And then our wish list, like we want the pool, we want the fountain, we want the, the formal dining room. So, and then hopefully you've already gotten with the lender, so you can have that information so you know your price range, because that is the very first thing. And get all of that together. When you know what you want, then you start interviewing agents. And so some of the interviewing questions, you're like, okay, but what do I want to ask that agent? So how long have they been licensed? And it's not that you necessarily don't want to hire a new agent, but as long as you know, do they have a mentor? Are they on a team that has the support? Just to find out if they're going to have the experience or the access to the experience that you will need. How many transactions have they done in the past year? And you want somebody that is in the market, knowing what's happening in the market right now, because it's a really fast-moving market. So if it's somebody who only does a couple or hasn't been in the market for a while, they may not be on top of what it takes to get to the finish line. And so this year, I'm happy to say our team did 141 transactions, and over 60 of those were buyers. And so we were thrilled with that. Do they know the area? And so when you're looking in a particular area, you want somebody that can help you navigate like the school systems and the transportation and how to get around, different things. It's important for them to know the area that you want to buy in. Are they available when I need them? Everybody has such different schedules. And if this person's like, yep, I work 9 to 5, well, so do you, maybe. And so you want somebody that will, go out nights, be able to accommodate your schedule, because that is very important. And do they seem to have my best interest in mind? So how many times have you been with a salesperson and they're just trying to sell you, but not listening to what you want, what you need, and just trying to get the sale done. One of the big things with Keller Williams is our integrity. And it's all about the client and building those relationships. And so you want somebody that is going to be looking out for your best interest at all times. And I have an example. This past year, I had a family that just kept trying and trying and trying. We put in several offers, and it was really tough. And one weekend we're out, and we looked at 6 different homes, and she's like, all right, I want to write an offer on this, 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 and this. And I'm like, okay, let's take a step back. You told me you didn't even like this house. I'm like, of course I want to make a sale, right? But it's not on a house that I know you really don't like. So you want to make sure you have that kind of person that you're working with. And then several people go, well, I'll just go to an open house and I'll just hire the listing agent. I'll just work with them. And, which is perfectly fine, but back to, are they looking out for your best interest? Just so you know, that listing agent has signed the contract with the seller. So they're looking out for the seller's best interest. Our team, we have Grace Miranda, the wonderful Grace Miranda, and she does the listings. The rest of us on the team are the buyer's agents that we can help you. We will represent you and be looking out for your best interest. So, if it is a team situation, you just need to make sure that you know that the person that you are working with is looking out for your best interest. So with the local market stats, I tried to pull as far back as I could to show this is the median sales price of homes, and I have the entire MLS, which is Los Angeles and a little beyond. I have Los Angeles County, and then I have Burbank, the city of Burbank. So it shows they've all kind of followed the same trajectory. As we know, 2007 was up higher, and this is where it came down around 2010, 11, 12, and then has steadily increased since then. With the, Burbank went from 500 low up to 1 million now. Over the past year, there was a 20% increase in home values. And so, getting into the market, everybody was like, oh, I'm overpaying. They've gained 20% already. So, looking through and trying to get some predictions, and, I think everybody says, oh, when I look at my crystal ball, well, I think the crystal ball's been shattered with everything that's been going on. So, from what I'm understanding, people are saying that 2022 will see continued growth in home value, still have competitive buyers, but it will be more steady and a more moderate pace than the frenzy that we experienced in 2021. So a lot of this has to do with the frenzy was because of the home inventory. And so you can see the home inventory, starting in 2017, and how many homes were on the market, how many homes were for sale, and all of a sudden how it has just dipped. In December, there were 342 homes for sale in Los Angeles, and compared to 2,126 in 2020. But as you can see, as of January, we're back up over 1,000 again. So predictions again say that we're going to start rebounding and getting closer to a normal year, but it's still going to be kind of a tight inventory. There's major influences that are what affects the whole market. So the low and slow mortgage rates. And Joby, that's why I pulled her back in to to discuss that, to say where they think that the interest rates are going. And it's going to be slow. We're not going to have a huge increase per what the experts say. So, but the mortgage rates always dictate how many people are able to buy, how many homes come on the market, and so that's one of the factors that affects our housing. The inventory crunch, the less inventory made for the price wars. One of the sources that I found was from Insider, and there was a decrease of competition. April was our high with 74.6%, down to November at 59.5 as far as how many people competing against a house. So inactive listings plunged 26% in 2021. But again, like I said, that should be starting to increase to give us a more normal pace. Steady growth, price growth, and as we can see, we had almost 20% in 2021, still rising. Experts are saying that this is going to start leveling off. They don't see that, that big dip coming. They say that it's going to start leveling off. They still expect there might be like a 5 to 8% increase in pricing this year, but certainly not anything like we saw last year. I think there's a couple different rules of thumb. Like a 5-year plan is what it takes to stay in your house in order to like break even. And then anything after that, you're building more and more equity. So the longer you stay, if the market goes down, it always comes back up. So it's cyclical. But the other thing that is affecting our how many homes actually will be on the market is expanding home space. So through the pandemic, a lot of people said, I need more home space because I need a home office and we're all going to be here. And now a lot of people have stayed home. So the larger homes are starting to be more on demand, which will free up a little bit less of competition for some of the smaller homes or condos is what they're predicting. And then people are going to be moving out a little bit further, which will, open up some of the competition more locally as well. And then the rising rental market has, definitely affected everything as well. I think for those of you who are renting right now, you've seen the rents go up and up. But there's now going to be, from what they're saying, several investors purchased homes last year. And so for the rentals, there's going to be more rentals available, which will give the people that aren't quite ready to buy yet, they're going to stay maybe in the rental, but the people that are ready to buy won't have as much competition with those people. So in summary, yes, buying has big advantages, including real estate appreciation and tax perks, mortgage interest deductions, as well as the freedom to do what you want to do with your house. And the economist told Insider, another source I use, that in July of 2022, it will be an easier time for prospective home buyers. The new signs suggest that forecast is holding up. So, does anyone have any questions on any of that? Just some information to share, things to think about. All right, thank you for your time.
Okay, hi everybody. I'm gonna stand back and take this off so I can talk. Is everybody good with that? Yeah?
Yeah.
Does anybody oppose that? I'll put it on if somebody opposes it. We're good? Okay. My name's Sophia. Nice to meet you. I am part of the Miranda team, just like the rest of the lovely shirted people. I'm happy to be here. I'm gonna start you guys off. Mine is not up here, mine is here and it's like interactive. So if you can take out your phone, I'm gonna give you a useful app that I find that a lot of my clients just love and they use it. And then they'll tell me, oh, this is what our mortgage payment is for this amount. So, the app is called Easy Calculators. And, let's see. I don't know if anybody can see it, but basically it has like a calculator with golden coins on the side. So if you just type in Easy Calculators, it should pop up. It's like blue background, white calculator with golden coins from your app store. So I'll give you a second just to kind of like tag that. Why I love this app. First of all, when you're traveling, it's kind of cool because you can convert just about anything in here. If you're trying to retire, you can look at your retirements, convert those. But let's focus on real estate because that's why we're here, right? So if you look on the top, it says loan calculator, and it has like a house. It's a yellow house. It has a dollar sign and it has an interest rate on it. And I'll just wait for you guys to get there, or I can show you, I don't know, whichever way you guys want to do it. Yeah, are we almost there? Who's there? Okay, so we have a few more people. Let's give it a few seconds. And if your neighbor's there and they want to share with you, then that's cool too. You can look through. So, okay, so now, homepage, when you open, you have all these little tools, right? And I'll let you explore those on your own. Go to the loan calculator. It's the little house, the third one on the top, from left to right. Okay, so open that, and then we're gonna put loan amount. Let's put something, I don't know if this would work for Burbank. However, let's start with like a $700,000 loan, right? And what did Joby say? Our interest rates are what, Joby, right now? About what?
Use 375.
375. Okay, so then we're gonna do loan amount 300,000, interest rate 375, term 30-year, and we're gonna hit calculate. And that gives you your monthly payment. It also breaks down how you're getting robbed with the interest rate and the payments over those years. However, let's not focus on that now. You can see your monthly payment. And so if you kind of work with that calculator a little bit, you'll see right now it's about every 100,000 you're looking at about 400 payment. Every 100,000 loan amount equals about $400 in monthly payment. So when you're looking at what amount are we shooting for, you can kind of do your own rough little estimates with this calculator and the 400 rule. Of course, taxes are not counted with that 400, okay? I won't go into the details of that, but if you have questions afterwards, I'm happy to help you with that. So I wanted to give you that tool because my first topic is how can I find the funds for a house, right? Example, so I was at a restaurant with two old friends of mine, and the parking was super cheap. It was lunchtime, it was like $3.50, the valet parking. And I didn't have any cash. I told the guy, I said, you know, do you take card for the parking? And he was like, yeah, we take card. Okay, I didn't see any card machine, right? Anyway, so then I go have my lunch, and then I come back, and then I'm looking for the card machine, because there's all kinds of scammers out there. I'm looking for the card machine, and I don't see a card machine, right? And I said, you know what, hold on one second. Let me look in my glove compartment, because I might have some change, And sure enough, I find 5 $1 bills. So I gave it to him cash. I said, keep the 50 cents here, Cole. So why I bring that up is because I was looking for it. I didn't even remember that was there. I don't even know when I put that there. But what happens with money, and I used to be a financial advisor, that's why I can tell you this. When you start looking for it, it shows up. When you start monitoring it, it starts growing. Okay? So I want you to be cognizant of this. I started real estate in 2008, and I think my strength from that has been helping people figure out the money aspect of it, because prior to that I was a financial advisor. And then we won't go into what I was prior to that one, okay? But that's been my strength because sometimes people think about all these myths, like, you know, Joey was mentioning this too, like, oh, I need 20% down to buy a house, I need 30% down to buy a house, I will never be able to buy a house. That's not true, right? So you gotta look at where you are. I'm here today, what does this look like, and start poking at it, and start thinking about your money, start thinking about ways to monitor it. Mint.com is a good one to monitor. Another one, Justin? What was your name?
Me?
Yeah.
Billy?
Billy, I'm so sorry, it has nothing to do with Justin. Okay, Billy, you mentioned about the debt, right? And so one of, a good tool to do to eliminate debt, because we all have debt, right? Just the one, I think it's the biggest reason why people don't buy a house sometimes, because they feel like, oh, another payment, I can't afford this, right? And so, especially with credit card debt, right? Debt stacking is a really good one to do. And it doesn't impact your credit score. It does nothing on the paper end of things, but what it does is it creates the snowball effect on paying off your debt. You can do it two ways, and again, I'm gonna go fast. You can ask me about this later if you have more questions. But you can either take the lowest debt amount, or you can take the highest interest one. I personally, I don't know, I'm raising boys, so they're like very active. So I like to see results right away. I think they've slapped this into me. I used to be more of a patient person. So I like to use the small debt amount. I start with the small debt amount. Let's say the payment on that is $50, right? The minimum payment. And then let's say my next debt, next smallest, is $100. And then let's say I have another one that is also $100. So that's $250, right? Okay. So then I say, okay, $250 on a minimum payment. But reality is, people are rounding these things up and paying extra, aren't we? That's what we do. I've been there before, right? And so instead of making this $50 $100, making this $125 or whatever, and just adding extra, you decide on an amount that you're gonna pay towards your debt. Let's say you decide, I'm gonna contribute $200 a month extra to pay off my debt. So you take that 200 and your first one, right, your first snowball that's gonna start it all, it was $50, you're gonna pay $250 on that. And then the rest, 100, they get the minimum. Once you pay this off, because that will pay it off quicker, because remember, we picked the smallest debt, right? So once you pay this off, you take this 250 and you put it onto the next one. So now your next credit card is getting $350 paid to it. Once you pay that off, then you go to the next one. It cuts the time about half, you know, depending on how aggressive you are and how much you're doing. So I hope those two things were helpful. The other thing that I want to mention about finding the money, and sorry, I have my notes on my phone, that's why I'm looking down. I'm not trying to be. The other thing I want to mention about finding the money is retirement accounts. So sometimes we want to buy a house and we're like, you know, we don't have any money, you know, we have this big fat or sort of fat retirement account, I don't know, kind of hard in California, but I have this chunk of money here, but I don't have anything liquid to put towards a down payment, right? Well, there are a lot of retirement accounts that actually you could borrow from if you're a first-time home buyer, okay? Or like there are Roth IRAs that you could take from, borrow, and then pay back. Again, a lot of finances, but I just feel like that's what my question's about. So those are just kind of helpful hints there. Let me see, what else should I say? There is a good rule of thumb. It's called the 50-30-20 rule. Do you guys know? Has anyone heard of that? 50-30-20 rule. You can say no, it's okay.
No.
No, okay. So 50-30-20 rule. So you take 50% of your income, and income meaning whatever it is at the end of the month, right? Some of us are 1099, some of us are W-2, you know, whatever. But whatever income that is the net amount monthly, 50% of that should go towards your needs, okay? Things that we need, like shelter is definitely a need, right? Shoes, for women, probably it's not a need. We're just, we just want more shoes. So it all depends. Watch, I don't know. I don't think watch is ever a need, right? It's more of a want. So it's the needs. 50% of that are the needs. Then you have the 30% that are the wants, right? Well, I really want this. I want a laptop because it's going to make me more efficient, whatever, however way you're justifying, okay? So those are the needs. And then the 20% is the saving component of it. To save 20% of that income that's coming in, okay? And savings can be broken down. One of the things about savings that I think the biggest account that you can ever have, the most impactful account that you can ever have is an emergency fund. Has anybody ever heard of an emergency fund? Right? So that, if you don't have that account, what that does, it constantly gets in the way of you actually saving for other things. Because there's always something that happens. Car tires, we have to change them. Oop, there goes, $1,000 or, whatever. Oh, the window broke on our sliding door. There goes, $2,000 there, whatever. So the emergency fund is something that you should have about 3 to 6 months worth of your income if you're on a W-2, and 6 to 12 if you're on a 1099. So then you're like, okay, well, tell me how to, beef that up. That's the whole point of your presentation, right? Well, this is what I did. Okay, so last year, there's other tricks that we've done, but for example, last year, I had pandemic-itis. Did anybody else have that? I had to get out of the house. And one vacation was not going to be enough. So she knows one vacation wasn't going to cut it, right? So I had to have more than one vacation. So I went to Dubai. It was so awesome. And then we had to have a family one, right? Because I didn't want my husband to feel bad. So then we went to Mexico. So what did I do? I depleted our vacation savings, right? So we're like, oh, okay, we got to replenish that, right? So one of the things we started doing, which I think is so cool, we bank with Chase. I'm pretty sure probably all the other banks have this too. Every time we deposit an amount in there, it takes a percentage of that and whoop, sends it to our savings, which is still part of Chase. And so when you're looking at your account, you can see that the money that you're saving. And it has been so significant. So significant. Because if it was left up to me, I'm not gonna go in there and take, that $50 or whatever and, transfer it to the other account or whatever. And sometimes it's more than 50%, sometimes it's $500, sometimes it's whatever, right? And so some kind of an automatic plan has been really helpful to replenish the vacation fund. So you can start one if you're looking into buying real estate and you're like, well, where do I start? Start with having a savings bucket account for the real estate. Okay, so I think that's been really helpful and really, really useful. Another thing that I wanted to mention about that is if you look at, like, for example, if you put like a bucket outside in the backyard, especially around this season, eventually it's going to rain and then they'll fill up with water, right? So how much water will you capture depends on the size of your bucket, right? So, but you got to start something. If you don't put a bucket, there's no water being captured. Money kind of flows the same way, and somehow, some way, we adapt to that. Because at first when we started this, I was like, no, I want my commission checks to, like, I need it, right? I told my husband, like, I need my commission checks. He's like, relax, we'll reverse it if we need to or whatever. Somehow you just adapt. I don't know what happens, but somehow expense-wise, you just adapt. It's just like when you get a raise and you start to make more money, all of a sudden you're spending more money too. So another tip that I would suggest is act as if you were paying your mortgage today with the house that you're going to be in next year, whenever your time frame is. Right? So for example, you have the calculator now, you can somewhat calculate your mortgage, right? So you calculate your mortgage, and let's say the difference between your current rent and the mortgage you'll be paying is $500. Okay? So whenever you pay your rent, take $500 and stick it into your real estate account. And whatever that means, you know, I'm just saying, it's not a fancy account, whatever account you create, you know. And then you just keep doing that every month, and you'll see how quickly the money ends up growing in that way. Do you guys have any questions about how to find money? Come on, let's make this fun. It's a Saturday. Anybody?
That was great ideas.
No? Okay, all right. So then the last one is, what happens, what time are we? Are we good? What happens if I don't find a home? I mean, I was given these questions, by the way. I just want you to know. So when I saw that question, I'm like, well, you don't end up with a house. That's what happens, right? So, I mean, there's so many different ways of looking at this question. What happens if you don't find a home? You continue to save, or maybe you're just looking in the wrong area, wrong category, maybe, right? Because let's say I'm just getting bid out on every offer, and I've put in 20 offers with my agent. Of course, my first thought is, oh gosh, my agent sucks. It's not your agent, okay? It's the market we're in. It's not your agent, I promise it's not your agent. So, but maybe I'm getting outbid because I actually need to look at a much lower price point, because if I look at all my offers, they've all gone up. They've been overbid by 150 to 200,000 over asking price. So I just have to look at it backwards. If I'm looking at this price point, then I got to go 200,000 down, and that's the price point I need to look at. Sometimes people don't want to do that. Why? Because it takes them from a single family to a townhome, and they don't want to face that reality. There is nothing wrong with that. Our first house were in the Cabrinis, townhome. There's nothing wrong with starting with a townhome or a condo, because then you're building equity as you're paying the mortgage, instead of paying the crazy rents that we have today, which kind of equals out about the same as a mortgage almost these days, right? So that's what I would say. I will ask you one last question before I leave, because I want to hear more interaction. Yes,
I have a question.
yes.
Wouldn't you say as an agent that if you don't find a home, that your enthusiasm will wane? So a good agent's responsibility is to keep you motivated and also give alternatives. If
Right.
you have a really good agent and you decide on one, this is where the advocacy for you happens. They will steer you in the right direction. Maybe right now is not the time to do it. A good agent is not in a rush. A good agent is in it for the long run. So I want you all to take that with you, because it's taken, I know Shannon and I have had, do you mind if I stand for a second?
Oh, cool.
Because I think this is a fascinating topic, honestly. Shannon and I have had this, and then so did you. We had almost the identical couple who were in the same price point. And we realized that we were circling around the same areas, and both of them were getting beaten out. And both of our couples had exhaustion. So I think this plays into what happens if I don't find a home. You can get emotionally exhausted by that. You need an agent that is fun. They take what they do seriously, but not themselves. That they tie into you and understand what moves you and what scares you, because there's an emotional component here, and a good agent won't get emotionally involved. They'll help question you down a little bit so you can look at this from a business aspect in the very beginning. Because buying a home is a business. And you have to look at it as a business transaction. Yes, it's the home you want to live in, but in the beginning, it's all business. A good agent will help you steer in that direction and keep your momentum up. So there's two things. One, the first
Yeah.
part is what you said, but there's also another part where you could get tired. We wrote between us almost 40 offers between the two families that we had in the same price point within 8 months. So that's about 20 offers for each family. Wouldn't you be exhausted after that? We did it. We kept their morale up, and they're all in homes. I'm just saying that's another side of it. I didn't mean to rain on
Yeah,
your
no, and
parade.
sometimes you come to the conclusion that you want to wait out the market. You don't want to be chasing the market either.
Yeah.
So that, sometimes that happens too, and it's all fine. My advice is, you know, what happens if I don't find a home? What happens if you never look for one or try? You gotta start, you gotta try, right? And you won't know until you try. Like Joby was saying, talk to a lender, get pre-approved now, right? And I just love that because I always steer people to do that. Give them your tax returns, get it started now so you can actually see what it is that you need to do. Because maybe you do need to wait a year. That's fine. That's a lot better than, going into like placing offers and stuff like that. I mean, you wouldn't fall, like us, we always connect with a lender. So we wouldn't be writing offers if you're not qualified. That's just the reality because we're not gonna leave a bad taste in your mouth and we're not gonna do that to anybody, okay? But there are agents out there that are like, sure, you wanna write an offer, great, and they'll just write offers left and right? So instead of doing that and feeling discouraged because you're not getting it, find out what it's gonna take for you to be able to purchase, and that might be that it's gonna take a year of doing X, Y, and Z, whatever the lender has advised you. So that's that component. But one of the things I was gonna ask is, I wanna know from each of you, just really quickly, what is the question in your mind that brought you here today? Because everybody had a question in their mind, that's why they came. Except for the spouse, because you came for support. But maybe you have a question in your mind too. So I'm gonna start from the back. What's your name?
Yes.
Jasmine? So what was the question in your mind when coming here today?
Honestly, how does the whole process work?
How does the process work?
Right.
Okay. Do you feel like some of that's going on?
Yeah.
Yeah? Okay. Lila's gonna close off, so this is gonna really help her to kind of address some of those questions too. What's your name?
Justine?
Justine?
Yes.
And what was the question in your mind?
I think one of the biggest questions was about how much percentage you have to put down, which was answered.
That's a great question. And I'm glad that you're asking that question instead of listening to all the noise of like, you need 20% down, you need 20%. So that's a really good question. Did you have a question in your mind?
No, not really.
No?
That was kind of geared to support. Yeah.
To support?
Yeah.
Did you have a
Overall process.
overall process? Yeah, so, yeah. So like, just like in the back, overall process, what does it take? But did you have a question in your mind?
Oh, no, I'm here with my partner. We're
Okay,
supporting it. We're
support,
gonna buy-
support's good.
Yeah, I have a home, I have a home now, we're thinking of buying a retirement home in Palm Springs, like, in a year, so we're just kind of,
Yeah, and it's good to start now, because you're saying in a year or so, it's good to be proactive and to start now for all the reasons that I mentioned earlier. What's your name?
Andrew?
Andrew? Did you have a question in mind?
I was mainly just curious about like current market trends, and I was kind of answered earlier.
Okay. Yeah, Shannon answered a lot about the market trends.
Yeah.
Okay. Cool. Well, I feel like a lot of your questions have been answered, and then Lila's gonna come up to kind of do her part. She has another section as well, and then we'll wrap up. And don't leave. We have a gift raffle to give away. So, thanks, guys.
I'm going to take my mask off, and I promise I won't come close to anyone. I'm Lila Drews, and I've been part of this team for 4 years, and it's been a wonderful experience to do that. I'm a listing agent, and I do work with buyers as well. To win in this market, I'm going to recap a lot of stuff that you heard. You need to find an agent that you're going to work with. In your case, you're already souped up, so you're in a good place. But all of you really do. I say interview at least 2 to 3 people, and some of the questions that were given earlier. Identify who that person's going to be. Advocacy for you is really, really important. What was touched on earlier is that some people like to go to listing agent. The listing agent's fiduciary responsibilities is to the person that they signed a contract with. When they double-end it, when an agent double-ends this, I want you to really put this in your head. They are just processing paper when they're double-ending it on your side. Because they made a promise, a legal promise, to the home seller. You're not always getting a deal. Sometimes it works out, but you're not always getting that deal. You need someone who's going to fight for you, advocate for you all the way through the escrow period, especially when you're coming down for after inspections, requests for repairs and such. So once you identify that, then you need to make sure that you are pre-approved. How many of you have started looking at homes without being pre-approved? And don't lie, because I've done it. You are shopping without knowing what your budget is. You left your wallet home. And what happens is that you're going into a home and you see something, you see this bright, shiny thing, and you see yourself there, right? And then you find out you can't afford it. Don't do that to yourself. It's not how you want to do. So your pre-approval is really the big one. That gives you the budget. Real estate agent, and then when you're putting in an offer, I've seen this so many times. You know, I don't want to put in the list price, or I don't want to give them that much. Let's go in lower. An agent will do what you want, what you're asking them to do. They will. But if they're telling you, and right now it is still very much a seller's market, it's not a buyer's market, you want to put your best offer in the first time around. We're getting on average anywhere from 6 to about 18 offers, depending on if it's a home or a condo and location. And you may not get a counter. They may just take best and final, or they just may counter just a few and they'll look at only the top. So really work with your agent of what your best offer is going to be, what contingencies might be removed, what can we move away from. And when I talk about contingencies, I mean you have inspections. None of us in this room would ever tell you to remove inspections, not ever. But we may talk to your lender. How tight can they make time frames on closing the loan so it's not a 21-day? How soon can they do an appraisal? Maybe that some can do spot checks, some can't. They might be able to get that done within 7 days instead of a traditional 10 to 12 days. You want to find out those things. Your agent will become best friends with your lender because you will give them permission to speak to one another so they can work through things together. And that's going to form the best offer that you can possibly provide it. Lots of people were doing personal letters on submissions. Laws had changed. We weren't allowed to do that for a short period of time, and then now we can do that, but we can't let a person know if you're male or female. We can't put a picture in there. We have to do generic things about you, and the agent will work with you. An agent that really gets to know you will know how to craft the letter, put it together, and send it in with the offer of letting the seller know who you are. Because sometimes the highest offer is not always the one that wins. We've seen it. Sometimes it's the one that's close enough and pulls on the heartstrings of the seller. Sometimes we're told not to provide a personal letter, and there's nothing we can do about it. Some sellers don't care. They just want a price. They don't want letters. And other times we won't submit a letter, and then we'll get a call from the agent. You know, they want to know more about your client. They really want to know who's buying the home because it means a lot to them. So your agent will help you navigate through those channels when that comes. So